Press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast.
Good afternoon, friends. Welcome to this webinar titled Trading Strategies and Identifying Value Picks. I am Sunil Patni from Finalia, and today we will talk at length about the most fundamental problems faced by thousands of investors like you and me. How to trade, how to identify a value stock, how to make the most of your investments, etc. As you might already know, this webinar is presented to you by Finalia in collaboration with Epic Research, both leading names in imparting top-class financial investment education to the masses. We have with us today Mr. Loveless Sharma from Epic Research, who will share his expert knowledge, which I am sure will help us open up new doors in matters of investment. So, without further ado, let us begin. Mr. Loveless, you may take over.
Thank you, Sunil. Welcome, one and all, to this webinar on trading strategies and identifying value picks. We at Epic Learning Center try to impart as much knowledge on financial market through a means of webinar to make sure that traders, investors, and the beginners in the market are well informed about the market dynamics. These are the following contents that I'll be taking you. I'll let you know about Penalea.com and Epic Research, our credibility in financial industry, then I'll take through the market behavior, factors that are affecting the traders' behavior, trading strategies, which are quite simple in nature yet effective. How do you identify the value picks? And I'll have charts in the end, which I'll discuss with you. And then I'll take up your queries.
The broadcast is now starting. All attendees are in listen-only mode.
To start with, I'll first speak about our organizer Finalea. It acts as a centralized information platform for stocks data which are there on Bombay Stock Exchange, National Stock Exchange, financial insights, corporate results, many news and announcements which are there in market related to companies, mutual funds, ETFs and IPOs which are still out of reach for normal investors for how to know which fund is going to perform, which ETF one should invest in, or which IPO one should subscribe. Finella has been delivering high-end financial research and data-oriented services, meeting clients' business requirements. Finella has the largest financial widget gallery and calculators repository in India. Intuitive and patent pending research tools help investors in selecting right investment candidates. Research tools which you can access on Finalia are Fundamental Screener, Results Insights, Security Market Line, which is very important to map out the overvalued or undervalued securities in market, Correlation Metric, and Market Mosaic are some advanced tools which can give you deeper insights, not just on overall index, but stock specific as well. About Epic Research, we are a SEBI registered advisory firm, having been awarded and rated by NSIC, SMERA, Dun and Bradstreet, and Leadership Excellence Award. We have won in 2014. We have presence in India, USA, Australia, and Middle East with over 15,000 satisfied customers and around 80% accurate trading curves. We provide need-based expert advice in the domains of equity market, commodities market, including multi-commodities exchange and national commodities exchange, COMEX, international commodities market, currency both at national level with 4 pairs and international forex as well, including 8 major, 16 minor, and other exotic pairs. Premium research report, corporate research solutions are some of our backend research we provide to some of the top institutions in the country. Fundamental research, identifying the value picks for our long-term investors is another vision. International markets, we have been covering Singapore Exchange, Kuala Lumpur Stock Exchange, Shanghai, and Hong Kong. Coming on to the most important slide for which we have this webinar is understanding the market behavior. When we talk about trading strategies, the first homework we need to do is understand the market behavior. Are you an investor who is a smart investor and goes at the end of the day with profit, or are you one of the investor who is just listening to each and everything around him about the market, about the stocks, and gets trapped? In this particular chart, you can see valuations on the left side, while there are many phases of the market. Stealth phase, where you have a takeoff in the market. Second is awareness phase. Most of the investors which are out of the market uh, have very less insights into the market, gets trapped at the new paradigm. Public always take part later, while smart money stealth phase, where the identification of particular trend is still not known, but when institutional investors, when there is an awareness in the market, we see the first sell-off and bear trap, and then we have a trend in the market. But many investors around the globe are part when there is greed, delusion, and new paradigm. What happens is when they invest in the market, they book losses later on when there is a denial and market returns to normal. This is a trap where most of the retail investors get trapped, and then they are out of the market booking losses. At the end of the day, they say that they were part of the market but they were able to make money. Much more depends on the homework. Have you understand the market behavior? This one chart is a clear trend where you can find yourself. Have you made the right entry into the market? Coming on to the next slide, understanding the market behavior. I'll give you Live example of Nifty. This is a Nifty chart, CNX Nifty, and you can see I have pointed out some circles on the chart. This is a 50 days moving average, which is quite short term in nature, but has given a good support in the previous 2012-2013 markets. With this chart, you can hardly identify what I'm trying to say, but there are certain things which are working in the market. All you need to have is the right entry. I always try to share this as much as I can. When you're trading into the market, keep your risk reward ratio 1 is to 3. Because when your risk is 1 and your reward is 3, the risk 1 is less because you also want to enter again into the market even if you have booked loss. So it is quite important that what is your risk and what is your reward. As the saying goes, that it's not about managing the return, it's about managing the risk. Whenever there is a reward, people will book profit and get out of the market. But what is the risk you are taking for your reward is important. With this chart, you can just see some circles over here, and I've tried to identify them on charts. Now, these can be some entry points, some exit points. My basic motto is when you can buy, why you have to buy, and how can you identify this particular thing. Now, coming on to next slide, you can easily see the circles, and I have put on months in there. What are the entry points? What are the exit points? See, when there is a behavior in the market, they try to move in cycles. They have a habit of following the past. This is what technical analysis say, that history repeats itself. But if you see overall 15 years chart, you can clearly identify how September has been one of the months where you have gained in the market. You can still look that December or January are the part where you see correction. It is not just for few years, but it's 15 years. And as today we complete uh, birthday of Nifty, which started its trading today. So this particular chart covers 70% of the behavior of the market. The point I'm trying to make is that you can enter into the market, but what is the time is very crucial. When you are entering markets in September, August, mid, or early September, you're already making 10 to 15% return. And when you can book your profit, you can clearly see on charts what are the tops there. December, January has been one of the points where we have seen correction in the market. With this chart, I'll take you to understanding the market. How do you understand the entry point? We have seen in the past chart that cycles do work. January to June has been one of the lagging period when most of the companies are going to declare their financial result. Many things have been priced into stock prices, the tax liability. So this is one of the lag period when we don't see any kind of action apart from union budget or other budgetary actions. But when you're talking about the entry into the market, June, July has been one of the most favorable months. Even if you see market corrected in August when there was a breakdown in Chinese economy and markets around the globe crashed. But somewhat September, as I pointed out on the chart, was as simple as an buy point or entry point in the market, and we have already seen 10% return in market till 8400. So cycles do work. You need to identify what is there. Identify the entry points to get at least 10% return in your trading investment. Whenever you are investing in the market, you must at least get 10% based on the statistics or the data do you have, which I have tried to point on chart. You can visit finalea.com, see some research tools over there, get access to historical data about Nifty, what has been the price action in last 10 years, and you can easily get 10% return if you are able to identify at what point of time market has given a turnaround. Once you have identified these, you can actually put your risk reward easily and maintain it. How you can identify risk reward is you can keep one is your risk, three as your reward. When I just said on the chart that September has been one of the entry points in the market point. Till December, you can just look for 10%, 15% return, and you can just keep a stop loss of 5%. So this will keep you on a very tight position of losing just one and earning three. Greed, fear, biasness, extending targets, and everyone on the same boat. See, when you are there into the market, you have made your money, but as soon as there are things like greed, or I can hold on and I can wait for higher profit, is one of the factors where an individual investor gets trapped. Fear, on the other side, is an opportunity for most of the smart investors. Whenever there is a fear, smart investors try to make best out of it. How to make, I'll try to give you real life example through my charts in the end. When everybody is on the same boat, when you hear echo from everyone that it's a buy, you must understand that most of the people are on the same boat. And when most of the stocks which have been unlocked their value, smart investors are out of the market, retail investors are entering in that particular stock. You must, as an investor, ask yourself if everyone is selling, who is buying? Or vice versa, you can ask if everyone is buying, who is selling? These two particular points are very crucial and gives motivation, a kind of a sense for you to do some research. Not most of the time you can have an expert advice, but as a retail investor, when you don't have any advisor, you can just ask this question to yourself and do some statistic or financial research, which is available. You can access finalea.com for that, and you can get many data what has been the return in September, August in the past, what has been the worst phase of the market, which months are particularly those months when we see a correction in the market. But it is also true you don't time the market. Whenever you have made an entry, make your profit and get out of the market. If you start timing the market, you are actually becoming trapped. See, this particular chart clearly shows what is a trader or an investor's behavior. Optimism, excitement are the early phases. But when there is a euphoria, when markets were at 9,000, everybody jumped in and gave higher targets of 12,000, 14,000. And when there was a euphoria, there was a highest risk. Many people invested in market through some mutual funds or through some other investment instruments. But then came the reality of the market, the denial, the fear, the capitulation, and then there is a despondence. But when there is in the market, depression or despondence, then lies the highest potential for earning. Can easily identify these things on charts or some statistical tools which are there, and you can access them and you can easily see and you can actually make some decisions based on these data. This is again the Nifty chart, and now you would understand why these circles have been there. How these circles of particular months have been one of the trigger points. In 15 years, 13 times, market has given a positive return in these months. The accumulated return is more than 200% every single year you invest in at the same time. If you are a trader and a smart investor who want to have a trading investment, you can go on to December and see a correction in the market, and you can take a vice versa position. Overcoming factors that affect the trader's behavior. Well, there are some simple rules which you should follow. Many people become part of the herd mentality. Many become part of what their broker is saying, what their sub broker is saying, what is coming on to TV. Whatever there you are seeing on television or your broker is saying, remember it has already been priced into the market. When there is a fear, of course, in the market, and there is a deeper correction in the market, I would advise you should consult a financial advisor. Why to invest, when to invest, if you have an existing position, can you average, what is the best time for accumulation. Greed on the other part is very crucial in your investment. You need to set your reward, how much profit you're looking into the market. Are you looking for wealth creation? Are you looking for some set of goals which you need to fulfill in next 2 years, 3 years, or you want to have a trading investment for 3 months? Each of the cases, you must set your reward. For, of course, trading investment purpose, I would say you need to book profits, clear your stop losses, book 70% targets on your rewards. Biasness, optimism, loss aversion, choice paralysis, recency bias, herd mentality are some of the basic uh, characteristic of traders which are less informed about the market. Optimism came at 9,000 when market was 9,000, and suddenly everyone kept in and the target was like 12,000, 15,000. For example, choice paralysis, one of the traders who are well known to particular stock or well, one segment for that reason is another kind of a biasness. When you're investing in the market, you should not have choice paralysis. Be it any stock, be it of any sector. Herd mentality is what happens when you're sitting at a broker's place or you're a trader sitting at a broker's office, and when everyone is buying, you buy, whenever is selling, you sell. But becoming part of herd mentality is a major trap in trading decisions. Strictly avoid what you hear on the streets. What you do yourself as research to invest your money is important. You can visit Finilea.com in that case. As simple as that, you can see which mutual fund has increased their buying into particular stock or which mutual fund is outperforming. Usually, small cap and mid cap funds tend to perform in second phase of a bullish cycle in the market. So you can see how these funds perform. You can compare them. You can use the tools. You can use calculators over there. But you need to do your own research rather than what you hear on the streets. What smart investors do is, I gave you a question when everyone is selling, uh, who is buying. So you can be an investor who enter into the market when everyone is leaving. For example, we have seen 2008 crisis. Market went up from 850 and crashed in that particular time, 2500. 4 weeks it did give an opportunity, but if you had your statistics with yourself, you could have entered and you could have seen exponential return. When everyone is entering into the market, for example, we've seen Nifty at 9,000 and retail investment was higher in there. People were entering into the market. You could have been one of the smart investors who can just judge out that this is the part when there is a over enthusiasm and you can exit at that time. Most important point in overcoming is trend. Are you one of the investors who is following the trend? If trend is there and you have made the right investment decision, you need to sit tight. You don't want to listen what streets say, what is coming on to televisions, or what is being heard on the streets, or what is your broker is saying. But if you are with the trend, you need to sit tight with your investments. There are some trading strategies which are simple yet effective. These are few points which you follow into the market when you're investing into the market, making a trading investment. You see a high return in your overall. The churn out of the return of the portfolio will be good as well. You need to follow some simple trading strategies. When there is a imbalance between supply and demand, you need to enter there. Use these points as entry and exits. Remember that in markets, history repeats itself. If you want an example, I can simply say back in 2008, we have seen market at a deeper correction due to subprime crisis. Then market again went on and came up till 6,300 level. In 2012, 2013, market was trying to break that level, but we have again seen a correction till 4,600 from the same level. So history does repeat itself if you are aware with your tools and data that this is one of the price or this is one of the entry point or exit points you should be booking profit or making an entry, you will have a higher chance out in your portfolio. Always set price targets before trading or investing. You must identify what is the goal you are into, what is your time horizon, what is your expected return. No, don't ever try to describe your profit in terms of amount that I'm into the market, I'm going to make 10,000 rupees. I'm into the market, I'm going to make 20,000 rupees. Rather than that, try to describe your targets in percentages. You need to understand when you are there into the market, be it an ultra HNI trader or as a retail investor who is having a 10,000 rupees cash, you must point out your price targets in percentage that you are seeking a 10% return or 15% return. If you are there into the market and you are becoming trapped in numbers that I want to earn 2000 daily, and if you book some loss, so your mind will play with the numbers and you'll try to make again an entry point and you might get your hands burned in the market. So try to have a return in percentage terms and book profits whenever possible. Insist on setting risk reward with 1:3. You may want to enter market again, so lose small, win big. Even if you are there into the market and you have earned money, you are out of the market. But then again, you want to enter into the market. So even if you are losing 1,000 rupees in case into the market, it is a small and you can actually enter the market and enter again. Be patient, do EOD analysis. It is very important for traders to do EOD or investors to do EOD analysis. When you are there into the market, what is EOD analysis? You can visit finalair.com. You can see the net asset values. You can see which mutual fund you have invested in has performed well. You can compare it. Is it one of the time when you need to shift or you need to apply some seasonal tactics or dynamic tactics into your investment? For example, you have into the markets invested in some kind of a mutual fund which is totally having its stake into large caps. So you can just see and compare with some of the pharma sectors. For example, market has been overall bullish from 2014 to 2015. Some of the banking stocks has given, or blue chip stock has given out of the box return, a fantastic return. But are you one of the investors who is not who is doing EOD analysis? Because when there are cycles, when phase of bullishness enters into the market, there are some cyclicals or defensive stocks like pharmaceutical, which are giving good return overall. So you can just visit finalair.com, see and compare mutual funds. You can actually take out your open-ended mutual fund holdings. You can invest on redeem and you can invest in pharmaceutical, a particular fund which has exposure to pharmaceutical sector. Or for example, when blue chips have given a good return for over a year or 2 years of time, you can compare large cap or mutual funds with small cap or mid cap mutual funds. you can compare which mutual fund has actually started giving a better return in 1 quarter or 2 quarters. So you can actually visit Finelia.com, do this EOD analysis as a retail investor, because at my end, even I know that a retail investor doesn't have that much access to many things, but they can simply go to Finelia.com. We are here to provide you many things on daily basis with simple statistics, simple return, and you can just analyze them and make a smart investment decision. Be disciplined and follow above rules. If you are disciplined into the market, and following the above rules, you will end up in profit. You will have a high profitability in your overall portfolio. You can see the turnout of your portfolio. Even if you are not able to invest in some kind of a mutual fund, you want to go into the market and have a diversified mutual fund, you can visit Finelia.com. You can see which fund has given what exposure to particular stock. For example, a few months back, some fund added Axis Bank at 470, 460 levels in August, and then we have seen a good overall return in Axis Bank, which has been around 15 to 20%. So these are some simple things which you can follow when you are investing into the market. You can't do research on your own part. Mutual fund industry is doing research, or you can ask us in that case when you have a best can enter into the market. So these are some simple things which you can do when you are making an investment into the market. Now, how do you identify valuables? Is a very crucial thing. As a retail investor, not many things can be looked by an investor, but yes, they can have access to many valuable things on Finelia.com, and they can access results insights or market mosaic or security market line to find out which stocks are undervalued in nature. Not every time we have to look at balance sheets, because the basic thumb rule is everything. High EPS, lower P, high dividend yield. If you are getting this in a particular stock, you need to identify what is the best time to enter into that particular stock. You can simply access charts and use technical analysis to get optimized return. Why do I use the word optimized return? Is that, for example, Tata Motors was at 550 levels, and Ashok Leyland at the same time was at around 60 rupees level. So if you have applied some of a technical analysis on that particular stocks, you could have seen that there was a positive crossover. Then Ashok Leyland, while there was a negative crossover of some of the short-term averages on the Tata Motors. So one stock which almost was down 50%, other stock on the other hand, like Ashok Leyland, was doubled from 50 to 100. Focus on defensive cyclicals and give exposure to growth stocks. There are many stocks which are defensive or cyclicals. They do work when the market is not right, when there is a corrections. So you can also give exposure to them. Some of the pharma stocks have given fantastic return in the past, which I try to share with you through charts. See the bottoms and know the supply and demand behavior. You must be able to understand. You can easily access some of the statistics like volumes on Finelia.com, and you can see how there has been a supply and demand behavior. Because as I told earlier, when there is an imbalance between supply and demand, then is one of the time when there is a possibility of entry into the market. Last but very crucial, that you must consult a financial advisor when you are seeking to invest into the markets. These are some of the tools or strategies which will help you making a smart decision. When you have made a research and analysis on your part, you can simply go to financial advisor. You can actually ask him that this is the research I have done and this is the data I have collected from Finelia.com. This fund is doing good, while we have seen decline in return of this particular fund which has exposure to real estate space or infra space. So should I be changing? Once you have done research at your end, so even your financial advisor will be having a good communication means with you and being so open, you will have a better decision while making it the market, by investing money into the market. Now, how do you identify valuables? I will surely try to answer each and every query after the webinar through some of the charts, where many of the questions will be answered on these particular charts. For example, as I've said, many of the large caps stocks has been there, but we have some kind of seen some kind of exponential growth into the market from 6,000 to 9,100. There was a decent return. There was a correction we have seen since last 11 months, since February 2015, and currently as well we are into correction phase. So this is one of the simple chart of Reliance Industries. It's a pure traders play. There is nothing different about this particular stock. When we have seen some exponential growth or good return in other large cap stocks, Reliance Industries has been part of the mean reversion. You can see simply on the chart from last 3 years, this particular large cap stock is stuck in a range from 1000 to 800. If you can simply put on a support trend line, you can see that an investment or a trading strategy you could have had is the stock clearly says itself that you can buy into 800, or you can do vice versa at 900 levels. You have had 7 or 8 opportunities, that too on a weekly basis, where you could have invested in the market for this particular stock for a time horizon of 5 weeks, 6 weeks, and have had the best risk reward ratio, because below 800, when you are seeing this stock coming down to 770 levels, just 5% of the stop loss might have given somewhat 10 to 15% return. So this is one of the charts which I am trying to share, that you can have a risk reward of 1:3 in the market, and when you're making an investment, of course it's a large cap stock, but if you can see it's a pure trader's play, and vice versa strategy can be applied to this particular chart. The green line which you are seeing on this particular chart is exponential moving average, and you can see how it has been part of a mean reversion over time. Whenever it was below for 2-3 weeks continuously below 21 days EMA, you see a particular jump back in the prices. When it is above this particular EMA, you have seen some kind of a decline. Only once, I would say twice, it has reached upper trend resistance line. Well, if you are a trader or an investor who is seeking to invest in the market for like 4 weeks, 5 weeks, or maximum 6 weeks, a short term, you can simply see that one time when there was a breaching of high resistance line over here, was you might have made the wrong decision, but there were ample of opportunities for investors in this particular stock when they could have earned a good amount of money, that too in few weeks. So these are some statistics, these are some things which you can simply apply into the market at your own end. I understand you cannot make decisions that well, or you cannot understand the technical analysis or the fundamental analysis, but these are some of the statistics which you can simply access on Finalia.com, or you can consult us as a financial advisor, and there are many trading strategies which will give you optimum return. Even if you are an investor who is seeking to make long-term wealth creation, one of the things which you can do in the market is have some these kind of trading strategies which will average out your risk reward. Now this one of the chart is of Ashok Leyland, and these are the moving averages which I have tried to put on, which is 34, 55, 200, and 100 days moving average. But if you see, I've given you an example of Ashok Leyland, how this particular chart has behaved. For the mean, higher the risk. For example, in this particular chart, if you see, the stock is already at a higher territory. It has been 50 or 50 rupees above its moving averages. Now the positive crossover is still there, but the risk of investing at this point of time is very high. While the reward you are seeking will depend on the risk you are going to take. So in this particular chart, you can see the mean or the averages which are here are way below 50, while the stock price is at 90. So it is almost like 40% down from its current price. So there might be some kind of a mean reversion in there. So your entry and exit points does matter the most. Entry at current point of time. If this particular stock trade below 84, you see a deeper correction and you see a mean reversion in this particular stock. So this one of the strategy you must follow, and you can see this particular stock, how it has followed this particular uptrend channel. It is still in the channel because once support trend line is reached, you may see a mean reversion and stock may come back to 75 and you may see further correction to 60. But at present, there is a high risk, high reward play. So you don't want to be one of the investors which gets trapped in these kind of a stock. For example, there has been a fundamental shift in the Ashok Leyland since last 4 to 5 months, where it has seen a high demand and its high commercial vehicles and LCEs, where it has been able to make best out of the demand in the industry, but which has been mostly priced into the stock price when it is above its mean averages very high, above 50 rupees per much higher, so there can be some kind of a correction. So this is just simple analysis which you can do on your own and see that how this particular stock has been and how it will try to give return. So the risk reward over here is as well is very high. So you don't want to be one of the investors who become trapped in this kind of a chart. This is another chart which will give you a deeper insight how golden crossover is one of the best tools which is used by many traders or investors around the globe. We call it golden crossover. Why? Because I've applied mostly crucial moving averages on this chart, 34 days, 55 days, then we'll have 100 and 200 days. This is one of the chart where Ajanta Pharma is there, and try to put on this golden crossover there. You can see positive crossover in this particular chart happened in 2012 at 50 rupees. Well, if you can take back into the history, 2011 has been also one of the point, but 2014 have taken this particular chart. This 2 years we have seen some kind of a stagnant period when prices were in range of 65 to 40 rupees. Positive crossover happened in 2012. This is just 3 years past, and you see the stock has doubled itself and has given 2800% return. It's as simple as that. You can apply on the stocks or charts, and you can see how this golden crossover. Now you see that 34 days moving average, which is here, hasn't been reached. It has been reached recently, but if you can see back in 2013, it has been acted as a good support. Then in 2013 and early 2014 as well at 640 rupees. It is one of the still stocks which could have had a huge potential, and you see the prices went up to 1600 and the stock has given an exponential return of 2800%. Now there has been a turnaround in the stock, might be some fundamental things have happened in the stock back in 2012, but this is somewhat called value unlocking of a stock. Now, as a retail investor, you might not want to go into the balance sheet, but as I clearly mentioned, you can just visit Finnalia.com, see which funds, what is the action, which stock is one of the favorite on the Dalal street. You can simply put some of the indicators like 55 days or 35 days. The stock hasn't reached 34 EMA in past 3 years, and 55 days EMA could have been your stop loss. Then also you might have been setting a profit of plus 1,000 rupees. So this is one of the golden crossover which is there into the technical analysis. It can give you good identification of the entry point. The fundamental may be that you can buy a particular stock. The unlocking is there still into the market, but someone if you want to go for value trades, what is the entry point if you're not being able to enter in this particular stock? For example, when the stock was at 640 level as well, you might have not been entered. You can simply see that 34 days EMA has been one of the trigger point, and currently as well at 1540, 1550 level, the stock is above its 55 days EMA and is placed at 34 days EMA. So this is just a simple thing which we do apply on chart and has given some kind of an exponential return. Now this is one of the charts which I shared with you, Elder Pharma. It's one of the beautiful stocks. Why? Because you can see I've tried to use this historical chart. It is the data is back since 2002. You see how these two particular moving average. The history does repeat itself. You can see that back in 2003 when there was a sport in value, you easily see the accumulation in this particular stock. From 40 rupees it went to 440, giving 400, almost more than 1,000% return. Now, how do you easily identify? It's simple that there was a 13-day crossover on the chart with 8 days giving a buy signal. History teaches itself, the statistics and the indicators. Now as well you can see it is potential in this particular chart to be a multi-bagger. Why? The trend has been declining. You can see here that the trend line has been in the declining trend. What has happened in the past at 40, 50 rupees is currently the stock at 90 rupees, 95 rupees. You see the active participation of the volume hasn't been this much, which has been in the last 10 years, 11 years. You can see back in 2005 the volume was the highest, and current volume you can see is as compared, which has happened in 2005. If you want to see indicators, you may now want to turn on to leading indicators rather than lagging indicators like moving averages. RSI is one of the leading indicators. Relative strength index placed between 70 and 30 shows if the stock is overvalued or overbought or oversold. Now in this particular chart you can see the RSI has already made a bottom back in 2014. In 2015 as well, the stock is sustaining the level of 60 rupees, and you can simply see that above 104, 105 rupees, at present 96 rupees, the stock is potential to be a multi-bagger. Why? Because the risk reward ratio over here, if you see, is, I guess, if you take 5% or 10% as your risk from here, the reward is somewhat more than 200 rupees, and you can see the mean reversion of this particular stock is 250. So you need to identify these particular things that are you able. At present, this is priced to be uh, multi-bagger. You need to turn on to some kind of a leading indicators. You need to look for volume score has been there that justifies the history. So at present, what the volume we are seeing, we have seen back in 2004, 2002. Short-term moving averages are contracting. They are very close, and you may have a buy signal where 8 days EMA or 8 days SMA take over 13 days SMA. Risk reward here is very crucial because the risk here is very low, might be a 20 or 30 rupees stop loss, and you may see some kind of a target at 250. So 150 rupees profit for a 25 or 30 rupees stop loss is kind of a trading strategy which I believe that every retail investor should follow. You can simply, as I've said, you can simply go for Fidelity.com, identify what is the mutual funds are doing. If you can't do the research, they are doing it for you. They are putting it on their website. They are putting comparative studies over there. They are putting security market line where you can see which stock is undervalued and has potential to be a multi-bagger, or which particular mutual fund has added, or how many mutual fund has added which particular stock. These kind of a simple EOD things at the end of the day, if you can do, because it's not only you're investing in the market, so you need to do some kind of a research at your own end, or you can consult us in that case. But when you have so much tools available online, I think you can at the end of the day access them and make some kind of a decision, or make some kind of a informed decision when you are there into the market. So this is Elder Pharma, one of the stocks. I've tried to show you many stocks, but this is one of the stocks. For example, Ajanta Pharma was there, the mean reversion, the golden crossover did happen, but this stock is here for a mean reversion, and at present the risk reward ratio is very favorable. With this particular chart and slide, I'll come on to some of the very crucial things, some of the tools which we provide at our website, like track sheets. We have a transparent process, and we regularly update all the product performance on our website. But in case when you are going to make decision into the market, you need to access some kind of research reports. Now, as an investor, you must understand you can visit www.finalea.com/research-hub. You can see a lot of things over there like market mosaic, security market line, results insight, and you can also access to many things like mutual funds scanner, and you can try to have some data available over there, and you can actually compare some of the best things or some of the stocks into the market and try to make a decision. You can note down as well this particular website, www.finalea.com/research-hub, and you can see our weekly reports at epicresearch.com. You can website our international website at www.epicresearch.sg, www.epicresearch.my. You can also send feedback for this webinar info@finalea.com or contents@finalea.com, or you can also mail us at info@epicresearch.pro, and we'll try to move on your suggestions and feedback and try to give you some of the market insights again. Yes, I can surely give you how supply and demand is found out to be unbalanced. You see, when markets, or for example, I've shown you Tata Motors chart, or Ashok Leyland chart, or particularly Nifty chart. You see, when there was a market, there are some rules technically which you call accumulation and distribution phase. For example, at 9,100, or even in this trade of Pharma, you can see the volume and the price has been very different. If you see prices for last 3 months, prices have been in an overall range of 60 to 100 rupees. Here you see the imbalance. You see there was a lag period or a dry period in this particular stock for last 10 years. Over here, if you see back in 2002, there was an imbalance between supply and demand, and the prices did emerge. There was a less supply, and when the demand picked up, here you can see higher volumes. This is the demand I'm talking about. Now, how there is an imbalance is at all-time high in this particular stock when it was at 400 levels. The volume was dry. So many people who were there into the market might have booked their profit or might have been out of the market. Even if you see at 220 levels, this particular stock over here has seen no such kind of a volume. at this particular point, you can see when the stock was again at all-time high, there was imbalance. Nobody was buying this particular stock. Even when at this point, many would say you should be one of the investors who should have this stock in the portfolio. So there was a lot of imbalance. You see, at this point of a time, there was no volume. So this is kind of an imbalance I'm talking about. And prices which are in range for last few months. Uh, for last few months. So your question over here, like how do you predict or how you can identify imbalance in supply demand, gets your answer over here. In few months of time, when the stock was in an overall trading range of say 120 to 70 rupees, the stock was just trading in 50 rupees. But you see the spurt in volume, you see the spurt in demand, right? So this particular imbalance, and when there is a kind of a contraction in the prices, a trading range, the demand has already seen spotted over here with high volume. Now we are expecting this particular trend to break out and hit mean till 250. You can simply apply some kind of a moving averages. Your question is very true and right. How do you as a retail investor, when a particular stock has already run up, how you as a retail investor can make sure that there is still room to grow? See, as a particular retail investor, as I've told you, uh, many things come too late to you. When people have already made profit in the market, retail investors or other investors jump into the market. So if you are not able to do research on your own, you can just visit finalia.com. You can see which mutual fund has given uh, good buying in particular stock, what stock they have entered into their holdings, and you can just identify that it might have been at the lowest point, or when any particular exit has been there. Many times, volume or moving average. For example, I have shown you one of the chart of Ashok Leyland. It has the moving average over in this particular stock is at 46, 47 rupees, while the prices are at the higher end of 90. So it is almost double of its moving average. So you can simply see 100 days moving average. Fundamentally, when you go into the market, you see quarterly results, then you make a investment decision. And charts, you can simply apply 100 days moving average. If the stock is going good on quarterly basis, fundamentally it will be above the moving average. But when the contraction in the results is there, uh, slowdown in the business, is over there. So you can apply available. If you are not able to do research, you can simply visit finalia.com, or you can ask her at epicsource.com. We'll try to answer you as well. How to use a slow stochastic and MACD at the same time and identify a trend. See, as far as you have used MACD and stochastic, leading indicator and the lagging indicator in a chart. For example, when you are looking at the chart, moving average does give you a lagging rate and lagging point of time, but moving average convergence is best used with RSI. Rather, try to use also does happen, but it is somewhat giving a lagging return in the overall price. So rather than that, you can use relative strength index when the prices are still low. If you can see in this particular chart over here, prices are still low. They have been at an all-time low along with higher volume. Now the RSI over here is making high bottom, high tops and is returning. So there is a high probability. So you can use it with MACD and you may get some entering or exiting the market.
Thank you so much for your technical expertise. I also extend my sincere thanks to all the participants. We hope that our effort of giving you valuable insights about how to go about stock trading has served the purpose. Thanks again to everyone.